2009. What an amazing year. This is the year that I bought my first tranche of Altria, ticker symbol MO. I bought this tranche of Altria. I am now yielding over 20% yield on cost, dividend yield on cost on my first tranche. This was also a good year because a song came out called Money to Blow by Lil Wayne, Drake, and Birdman. And I personally, as a dividend stock investor, I got some money to blow, and I got some money to blow thanks to the fact that I bought Altria at such a bargain basement price. I want to discuss with all of you today, right now in 2020, history seems to be repeating itself. Altria seems to be on sale right now. I want to discuss that in today's video because I have always done really well as a dividend stock investor when I buy high quality dividend stocks that are kind of against the market. Contrarian investments, if you will. Everyone is running from them. I like to run towards them. So I want to discuss Altria today. I also want to discuss today an oil stock, BP, because this is another sector right now in 2020 everyone is running away from. And I've always found in my dividend investing experience that oftentimes these contrarian opportunities can open up a world of value, a world of opportunity. I got an update for all of you today on SBUX as well. Really exciting video. Let's get started. All right, everyone. So let's start with Altria. I want to share it on the screen right now. Check it out. You can see right now that Altria is trading at $39.50. This is a sin stock. And the EPS in 2020 will be $4.31. 2021 will be $4.56. These are the expectations that analysts have for their earnings. I think the analysts are probably pretty close here because this is a very predictable and well-performing business. The forward PE for 2020 will be coming in around 9.16. The forward PE for 2021 will come in at 8.66. World-class business, over 50 years of consecutive dividend increases, trading at a PE less than 10. Let that sink in. That is amazing. That is value. Let's keep going. And so the dividend per quarter is 86 cents. It was just raised by 2.4% recently. The dividend per year is $3.44. And so that puts the starting dividend yield at an impressive 8.7%. I highlight this because it is so impressive. 8.7% starting dividend yield. One of the reasons I've been so successful with dividend stock investing is I got in back in 2009. I bought stocks like Altria that were trading at bargain basement prices. Right now in 2020, in general, most of the stock market, a good chunk of the stock market, it is fairly valued, if not overvalued right now. But there are certain pockets of opportunity out there, contrarian investments, if you will. I'm highlighting those in today's video. And I think Altria is one of the better contrarian investments out there right now. Let's keep going. And so the payout ratio on Altria in 2020 is 80%. Next year, it'll be 75%. So it's right in line where management wants it to be. The 5-year dividend compound annual growth rate is 8.8%. Although the recent increase was only 2.4%. And so I don't think the growth rate of the dividend will be quite as big as it has been, but that is more than compensated by that starting yield of 8.7%. And the market cap is only $73 billion. And so those are just some quick statistics on Altria. I want to move now to the right-hand side of the chart that you see on the screen right now just to share some cool thoughts about this stock and a summary of the first tranche that I bought this back in 2009, the same year that that track was dropped by Drake, Lil Wayne, and Birdman. So check it out. The first tranche I bought at $15.99. I'm up 147%. My simple yield on cost, not counting reinvested dividends, is actually 21.51%. Not bad at all. And so even with an old school company like Altria, where the product that they sell is generally declining over time, They have been smart about acquisitions. They've been smart about pricing. They have been smart about getting into new markets such as heated products. And they have managed to grow their business. They have managed to increase their stock price through great performance of their business over time. Yet the stock has fallen recently. It is at $39. It is at a really attractive valuation, and so I am taking notice. But despite the recent drop, I'm still up quite a bit on that first tranche. So let's keep going. I want to share some thoughts because so many people have asking me, Ian, what do you think about this company right now? I'm glad you do. I own 46 dividend stocks, and so quite frankly, I don't look at each of them all the time, but I've been getting feedback from the community, and this is why one of the reasons I love the community so much, and all of you have been asking, Ian, what do you think about Altria? That's why I'm doing the video, and you guys got me looking at something and thinking about my own strategy, and so thank you. Thank you to everyone out there. Drop a like if you like Altria. Drop a comment below if you own Altria stock. I would love to hear, but let's keep going on some thoughts about this company. So check it out. Now, the dividend, as I mentioned, was recently increased by 2.4%. I think that the value here is very compelling. The starting yield is compelling. The PE ratio is compelling. I think we are in deep value territory, similar to when I bought this thing back in 2009. When I bought it back there, it was in deep value territory. And the company continued to thrive over time. That's why my yield on cost is so high. You don't get a yield on cost of 21% in only just over 10 years of time. You don't get that unless you buy a stock in deep value territory and the stock happens to do really well and increase its dividend over time. And what I'm saying is I think that that same opportunity potentially for investors buying Altria in 2020 here, looking out another 10 or 15 years, that opportunity for the starting yield to be high here in that 8-9% range and to get it up to maybe a 20%, I think that opportunity there is, again, I think history could repeat itself, but we shall see. And that gets me to my next point. Check it out. The U.S. only exposure of this business scares me, and it scares me big time due to political risk. Personally, I feel that PM Philip Morris is a safer bet. I highlighted it in my last video. I shared it a bit. People were asking, Ian, why are you giving so much love to Philip Morris? Why do you love PM so much? One of the reasons I've always loved it so much is it is international. It does not have U.S. exposure, and it has broad exposure to all of the other countries outside of the U.S., which I think mitigates risk. Now, I'm going on memory here, but when I've looked at PM, historically, the margins have been a little bit tighter than with Altria, and one of the reasons for that is the excise taxes internationally are outrageous. But that being said, even on a unit economic basis, it's not quite as good. I feel better about PM at night often because I live here in the U.S. I see how politics happen. I see the hatred for these types of companies, and I see the agendas out there in politics, and that's the number one thing that gets me worried about this company. And I think that's one of the reasons, quite frankly, that it's on deep discount now. I think everyone is going towards quality. With the pandemic, with the craziness of 2020, I think people want comfort in their life. I think investors want stability, and they're going towards those growth stories, those tech stocks. They're going towards consumer staples that I all too often talk about here, some of my favorite household brands type companies, but they're staying away from companies like this. They're staying away from it, even though, as I'll show you in a minute, that the financials are flourishing. They just announced their Q2 earnings. Earnings are good. I'll share it with you in a minute. I think despite the good earnings, they're staying away from this. And I'll tell you, it's an interesting thing. It's an interesting thing. This sector and this stock are perpetually on sale. One of the reasons it's always on sale is because investors generally believe that sooner or later, right around the corner, they're done. The business is over. It's over because people aren't using their products, so on and so forth. The politicians hate it. The media hate it. And so investors think they're always one step away from having a horrible quarter, having a horrible year, cutting the dividend, this and that. And it's been that way, though, for all of the time I've owned it. And so the way I look at this stock is it's one of these things that's often on sale because everyone thinks it's always going to go out of favor. But you live through it and you go through enough years with it, It never does. It never does. And so it's a very interesting thing about Altria and the sin stock industry in general. Let's check out some more takeaways that I have with this stock right now. So contrarian investing has just worked for me. I was buying General Mills a few years ago. Talked about this in my last video when it was on deep discount because they took on all this debt buying the pet food company, Blue Buffalo. Lo and behold, 2020 comes and this thing is doing well. It raised the dividend. World is changing. General Mills is thriving. I kind of look at Altria right now as a potential contrarian play, and that is exciting to me. Now, to be fair, for a while here, I was staying away from sin stocks, and I haven't been reinvesting dividends, and it's kind of on two fronts. It's on two fronts. One, I haven't been doing it because my exposure to the industry is huge. Two, I haven't been doing it, quite frankly, for kind of, at times I feel like maybe I'm ready for something different. I'm kind of ready from a spiritual standpoint, kind of from a, say, socially conscious investing standpoint to kind of move on. I'm going to leave what I have alone, but I ain't adding more to it. But lately, you know, I've been thinking, and the way I look at it is this. Thug life investing. That's all I got to say. Thug life investing, I'll probably buy more of this thing. And I'll tell you, I've been buying mainly my core stocks this year, my ride or die stocks. But I'm going to do a video actually really soon here on the next kind of 5 stocks that I love the most that are not ride or die stocks. And I bet you Altria is going to make that list. Altria is a fabulous company, and even though it has that huge risk, I kind of like PM more. I sleep safer at night with PM. At the end of the day, if I had to pick one of the stocks in the sin stock industry and I could only own one, it would be Altria. It would. It's my favorite of the bunch. They have the strong margins. They have the broad portfolio. Covers traditional products, smokeless products, heated products, all kinds of different products. Kronos acquisition, horrible Juul acquisition, but they made it through that, I think. But it's my favorite of the bunch, and their net margins are really strong, which we'll see in a minute. But I've just been thinking, and here's the deal. And the reason I do this YouTube channel is so you can see me think in real time. And if you've been following me long enough, you've probably even seen my mind changes from time to time. My mind changes, and that's okay. I think it's okay as a dividend investor for your mind to change. For me, at least, as long as I stay in the framework of dividend stocks. The thing where my mind would be changing too much is if I was like, okay, I'm going to sell all my dividend stocks and get into tech stocks. No. But within the framework of dividend stocks, within the 46 stocks I own, I was kind of shying away from the sin stocks for a while, and I'm still going to be conservative there. I got a lot of exposure to it, but I'm just starting to think like, hey, with all the political stuff out there, this and that, thug life investing, I just kind of want to buy more. And at these levels, I want more money to blow, so I'm going to go ahead and probably pick up some more shares of Altria. But anyways, let's keep going. By the way, it's late at night, and so I'm doing my thing. I had another second coffee of the day just to power through this late at night. So apologies in advance if this is a little bit less organized than my traditional videos. Thank you for hanging in there. If you appreciate me staying up late at night to do these videos, please give a thumbs up, a like. It means the world to me. So check it out. What does the future really hold for this category? I don't know. I think there's a lot of risks with this category because people are consuming their traditional product a little bit less, but they have other products like the heated product that are coming into flavor. But also the way I look at the future is, do we believe the pandemic is over? Do we believe there will be a wave 2? Do we believe in another 10 years there will be another pandemic? One of the things that 2020 has taught me is stocks that otherwise might not do well are doing well. There are things right now like General Mills that are doing well. There are things right now like these sin stocks that are doing well, especially in Q1. People were stocking up like the world was ending. And now I'm not trying to make light of a horrible situation and a horrible pandemic, but what I'm trying to say is the future may hold good. The future may hold bad. If the future holds good, I think these stocks will generally do fine. If the future holds some of that bad stuff, though, these stocks like Altria, it's almost a hedge against that. It's almost kind of owning an option, if you will, that if things get really rough, I've got something in my portfolio that's probably going to flourish, because when times get bad, look, people are just looking to stock up on the products that Altria sells, and that's what we saw in the first half of 2020, and I will share that with you in a minute as I go through the financials. Some more high-level thoughts on this company. Net margins are 27.4%. It is up from the first half of 2019. That's for the first half of 2020. IQOS has lots of potential. There have been some challenges with their Anheuser-Busch holdings. They own, I believe, about 10% of that company, and that company is facing some challenges in 2020, but I'm sure they'll get through it. We talked about how it's perpetually undervalued because everyone thinks we're always at the turning point where they're going to cut the dividend and go out of business, but they never quite reach that turning point. But I do think it's a bet on things in the world getting worse. I think it's one of those contrarian holdings where it's just like, hey, if things in the world get worse, this is one of those companies that tends to weather the storm pretty well. Certainly, though, not a core ride or die stock for me. It carries a lot of risk, all of that stuff, but it's an interesting contrarian play right now. If I do buy more, which I might just wake up and buy some more tomorrow. I just kind of feel like it at a yield this high, it ain't going to be a lot. It's going to be a one-time, two-time kind of thing. I'm still not going to reinvest dividends, but the opportunity to add something like this at these prices with this yield, with the stability that the company offers, it ain't going anywhere in my humble opinion, despite what the pundits think. The only way, quite frankly, it might go somewhere is in the election, the next one and future ones, the Democrats win. And I'm not trying to make a comment one way or another, which party is better, this or that. Personally, I think people get way too behind politics. I think people put way too much weight in it. But that's just me. Rather than worry about politics, I like to worry about accumulating assets, buying dividend stocks, all that good stuff. But anyways, if things go more democratic in the United States in the future and that kind of takes a stronghold, I could see a pretty bad scenario for a company like this, and that's the risk with it. But as long as that doesn't happen and things kind of stay somewhat balanced in the politics, I think it'll be just fine. It's just some of those politicians out there really want to put this thing under, and some organizations out there like the FDA as well. And so something to watch out for. But anyways, I want to move on. I want to share just some stats with Altria that I saw in their recent earnings report to highlight some of that with everyone in the community today. So let's check it out on the screen right now. And so what I want to start with are just some highlights from their recent earnings report. And the first thing I want to just show are the results. And so what you can see right now is in Q2, revenues were down. EPS was slightly down. Actually, it was up if you look at the adjusted one. But the reason for that is Q1 was so strong because people stocked up when this pandemic hit. So what I really like to look at is the first half of the year. And when you look at the first half of the year, this sleepy old school company, revenues net of excise taxes were up 5.5%. Just raw net revenue up 3.9%. Reported EPS is up 13%, adjusted diluted up 8.5%. This company is thriving, everyone. Everyone hates it out there, hates this thing. But look, you gotta love 8.5% increase in adjusted diluted EPS. That is simply staggering for an old world company like this. Again, as I mentioned, it's kind of a hedge against bad times, if you will, out there in the economy. This is something that'll do really well in bad times. So I want to move on. I want to look a little bit deeper at some of their numbers. So check it out on the screen right now. And what you see is their operating results by segment. And so what's so interesting is their traditional products that you see in the first column for the first half of 2020, the percent change in revenues were 3.9%. So it's up. The oral products that they sell were up 10.4%, and this is that UST acquisition that they made all those years ago. Gotta love it. Their wine division was down 12.3%, and the reason for that is a lot of those sales it seems, happened in person. And because of the pandemic, less people are visiting those wineries in person. And so that's the reason for that. And then all other is, I don't know why, but it's down big time. I guess we're looking at revenues, and you have, honestly, I don't fully understand that. It has a negative revenue there. So I'll have to look into that further. It may just be how they are categorizing their numbers. But anyways, the total revenues for the first half of the year are up 3.9% here, which is so fabulous to see for this company. And so moving on, I want to look at the balance sheet a little bit, because one of the biggest mistakes that this company made in the last few years was the Juul acquisition. And I don't think they could have even foreseen what would happen, but basically they made the acquisition and then Juul just got attacked by all of the politicians, all of the regulatory bodies that be. And so it put a lot of debt on their balance sheet. Not a lot of value on the revenue and earnings side, because that business has been having some challenges. But anyways, check it out on the screen. I want to look at the assets of the balance sheet first, then I'll look at the liabilities. And so assets, they've got $50 billion. And $4.8 billion is cash. They got some inventories. A lot of that is goodwill. And this is probably from these acquisitions that they overpaid for. Now, some of that has already been written down as impairment charges already, but they still got quite a bit of goodwill from those acquisitions. And they got a lot of investments. I think a lot of this $22 billion here is in their Anheuser-Busch holdings, which is really valuable, and other long-term assets. So they got about $50 billion in assets. I like to see that the assets are up slightly from last year, from December 31st of 2019. I guess just the end of last year, it's trending up. And so I would like to see that trend continue. And so I want to look at the liabilities next. So I'm going to share it on the screen right now. And what you see on the liabilities is they have $44 billion total liabilities. That is up from the $42.9 billion of liabilities at the end of 2019. And what's interesting here is, let's see, where is it trending up? It looks like in current liabilities, actually, it's trending up a bit. Long-term debt is trending up about $500 million. Basically, it seems like liabilities are trending up. Assets are also trending up. It's somewhat of a similar clip. Personally, if I had one thing I'd like to pick apart with this company, is it would be nice to see them pay down some of the debt. It would be nice to see them go ahead and pay it down. That being said, it may be that the reason the liabilities are not trending down and won't trend down is because this thing is a litigation target. It always has been. It's a political target. And it may be that they don't want to make the balance sheet that good, because cash is probably better distributed to shareholders because it gets it out of the company than it is keeping it in the company, where someone who thinks they're doing the wrong thing can come in and try to take that money. And so it may be an intentional thing here. That being said, I do want to point out, again, that the long-term debt is high. It's about $27.5 billion. And the reason that it is high is because of the Juul acquisition, Kronos acquisition. They paid a lot for these acquisitions, probably more than they were worth. Certainly for Juul, Kronos, time will tell. Juul, certainly they did. But again, I don't blame them, because the political forces really came down hard when they did it. So long story short, to summarize all this on Altria, it's not a ride or die stock. I have a little bit of hesitation buying the thing because it's not part of my core investment charter. Is it a top 20 stock for me? Is it going to be in that next 5 that come after my ride or die? Yes, it will be, most likely. Will I pick up some shares here because of the value? Probably. Do I feel like, I'm bad about it? Not really, because yeah, my allocation towards this sector is high, but I haven't been buying much of this sector for a while. And when I see deep discount value like this, I gotta go for it. That being said, obviously there is a socially conscious side of it. There is a spiritual side of it. I gotta weigh that in. But right now, hey, I weigh all the factors. I'm gonna probably put a little more in this one. And so that's what I think. Let me know in the comments below what you think about this company. And I'll tell you again, just to kind of close out, because why is the socially conscious and spiritual side changing a little bit here for me? I'll just tell you, 2020 has been an eye-opening year, and I see, like I said, I try to stay out of the politics because I think it's a waste of time, but I also see what's happening in the politics, and I feel like a lot of agendas are kind of just being forced upon people this year, and I guess buying this is kind of my way of rebelling against that a little bit in my own way, and I just feel like, you know what? Everyone needs to arrive at their own conclusion and think freely for themselves. And this is a year where I just feel like so much is coming our ways from the politicians. And I'm just trying to say, like, hey, some of these radical, like politicians out there trying to go against this stuff, they're the ones, in my opinion, that I think are doing the wrong thing. And so I want to vote against that with my dollars. That's where I'm coming from. That comes from the heart. And so what I'm trying to say is, Thug Life Investing. All right, everyone. With that, Thug Life Investing, let's move on to BP. So I want to talk about BP. I don't have as much to say on this one, but I got a lot to say. Been getting a lot of questions about the oil sector. Love you all. Keep the questions coming. And so with BP, let me just share some stuff on the screen. Check it out. Late night here, everyone. So I am doing my thing the best I can. Thanks for hanging in there. BP is trading at $17. They're going to lose $1.29 this year. Although keep in mind that a lot of the losses, to my understanding, are non-cash charges based on what I'm reading. They have upstream kind of developmental pipeline drilling type of operations they were planning on doing and uncovering new deposits of oil. And with everything that's going on this year, they put an end to that. And my understanding is they're taking some non-cash impairment charges against those initiatives, which is affecting the EPS. And so that may be some of the reason that it's negative, at least from my understanding. But I ain't going to lie to you. This is a non-U.S. company. It's an ADR, American Depository Receipt. This is a UK-based company. And so all I'm trying to say is financials on this kind of stuff are more difficult for me to decipher, but I do my best. And whenever I'm looking at anything international, there's an added layer of complexity to it. But anyways, let's keep going. Check it out on the screen right now. Next year, they're estimated to earn $1.17. And so the PE this year is non-existent because they're losing money. Next year, it's only going to be 14, which is honestly pretty high. And so the dividend right now is a 7.2%. It could get cut again, but that's after it's been cut. Payout ratio this year, non-existent. Next year, it's over 100%. Dividends going down. Market cap is $57 billion, which is nothing. Let me share you just high level what I think about this. When you look at something like this in the moment right now, the numbers don't look that good. Contrarian investing, there's kind of Altria is one thing about contrarian investing, but Altria is kind of in a league of its own because it's trading at a bargain basement price. But when you look at the fundamentals, despite their bad acquisitions, they're pretty good. But people just kind of stay away from it, like I said, because they think it's always one step away from going out of business, but it never does. It just keeps growing. It's almost like a common misconception about it. But BP, it's a different type of contrarian play. The thing that's different with BP is it just flat out looks bad right now. And once it starts looking somewhat good again, stock price will have gone up. And so what I'm trying to say is this is the kind of contrarian play, in my opinion, just sharing my personal journey, not sharing investment advice, just sharing my personal journey for fun and entertainment. But my experience tells me when there is blood in the streets, when things look really bad, when the numbers, the analysts, no one thinks it's good, that's when a company like BP, it's oftentimes a good time to buy. And so I have my eye on BP and the other oil companies. Am I going to buy any? Probably not, because I have to stay somewhat disciplined right now to stay in my core ride or die stocks, because that's my investment charter for the year. I may make an exception here for Altria because it's kind of close enough. It almost makes the list. BP, it's not ever going to be a core stock for me. That being said, will I buy a little? Will I make an exception? Maybe I will, but I'll have to really think about it. But anyways, I see a lot of blood in the streets right now. Total contrarian play. And the indication that shows me, first and foremost, that it's a super contrarian play right now is it is trading at levels not seen since 1994. You have to go back to 1994 to buy BP at the prices it's trading at right now. And so that's really, really compelling. Check it out on the screen. I want to show some more things about BP. The price of WTI crude right now is 39, Brent crude 41. This thing will do fine when oil is in the 50s and 60s. It won't do great, but it'll do good enough to be trading a lot higher than $17. The price that BP is at right now is the lowest. It's at the lowest it's been since 1994. And the price of oil, mind you, now is up in the high 30s, low 40s. That's a lot higher than the $12 low that it hit earlier this year. And so what I'm trying to say is I think there's a bit of an overreaction in BP right now. I think there's an overreaction because they had a bad quarter. They had a really bad quarter because they did some really big write-offs on some upstream projects that they were working on. And so anyways, let's continue. They had substantial non-cash write-offs. One of the things I like about BP is they have a great plan to transition from a pure play oil company to a green energy company with battery-powered electricity for charging cars, solar, so on and so forth. They have a plan and they highlight it and they're investing and they're pouring a lot of time, money, resources into it. One of the things I like about BP right now is if I bought BP now, everyone out there, most people in the community would think I'm crazy. I kind of like that because it kind of tells me I'm right. It kind of tells me, yeah, now is the time to buy. Because when people don't think you're crazy, it's too late to buy something like this. So that's something I really wanted to highlight as a takeaway. Sometimes it makes sense to buy what everyone else hates. And that's kind of the theme of the video today. Deep value, deep discount, great values, great opportunities. Altria is kind of in a league of its own. BP, I would say, carries more risk because Altria is making money just fine. The risk there just comes from these crazy politicians and agendas that are out there. But what happens with BP is literally the very resource that they extract from the earth and sell. They can't control the price. And it's something that there's a lot of interests out there moving away from it. Now, in all reality, if we didn't have a pandemic and things got a little bit back to normal, demand is going to pick up, the price is going to hold more stable, things will get back to normal. But there are different types of risks with BP than there are with Altria. That being said, I think both are interesting contrarian plays right now. Can I bring myself to buy BP right now? I don't know. Probably not. Can I bring myself to buy Altria? In a heartbeat. I'd feel pretty good about that. And so that's where I stand with those two. Now I want to move on to the last segment of the video today on SBUX. So check it out on the screen right now. Let's contrast some deep value with a different kind of company. This is a company that is trading at a fair value, if not an overpriced. I've been buying a lot of it this year because it's a core stock, ride or die for me. I just want to share it because I think it's a good indication just to compare some of these riskier stocks, quote unquote riskier stocks, Altria and BP, with something like this, just something different. So let's take a look at it right now. And so with SBUX, it's trading now at $88. They just raised the dividend by 10%. A lot of people were saying, Ian, they're going to cut the dividend because they're losing money this year. No, they're not. Of course they're not. They raised it 10%. And so the key thing I want to highlight here is something like BP, they cut the dividend. Why did they do it? There are big, big business issues. SBUX can weather a year or two that is temporarily bad because of the pandemic and not only not cut it, but raise it. So anyways, let's keep looking. They're going to earn 95 cents this year, 270 next year. PE this year is 93, next year 32. High PEs. Dividend is 2%. Payout ratio this year is 189%, next year 67%. Dividends going up 17% per year on average, although the recent increase is only 10%. Only is very good. But check this out. Just on the, I'm going quick here because I got some stuff I got some stuff on my mind I want to share here. But the best tranche I bought in 2020 was at $51 back in March. It's already at 88, and so I'm up 73% just from earlier this year. When I bought Starbucks earlier this year in March, though, I'll tell you, it kind of was the contrarian play at the time. It kind of was the BP of the time. Now, look, I'm not going to argue all day, every day. Starbucks is a much higher quality company than BP. BP just ain't the quality Starbucks is. Sorry, BP. It's true. But nonetheless, when I bought it back in March, it was a contrarian play. It was a contrarian play because everyone's like, hey, at this pandemic, no one's going to go to Starbucks. And it's true. For a while, no one went to Starbucks. But now everyone's going to Starbucks. I think even the analysts are underestimating how many people are going to Starbucks because everyone's going again. Everyone loves it. They're not going to live without it. I'll get to that in a minute because I flat out think a lot of people in the dividend investing community are so wrong about this stock because they're like, hey, I wouldn't pay $6 for a coffee. Well, of course you wouldn't. People in this community, because people in this community are trying to achieve financial independence. They're saving pennies, everything they can to put it into stocks. But most people in society these days are more than willing to pay $6 for a coffee, especially when they believe that the world is coming to an end and they just want something to get through the day that makes it a little bit nicer. And so I'll talk about that in a minute. That's my theory on this thing. But at every Starbucks I see completely packed cars around the block to get into the thing. And so moving on, though, check it out on the screen. I'm up 73% just since earlier this year. My yield on cost is 3.5%. Not bad for Starbucks. And it just goes to show that buying quality when others are running it's a good strategy. It's worked well for me. And obviously I've bought Starbucks all the way up. I bought it in the 50s, 60s, 70s, 80s. I don't think I'll be buying it in the 90s. I'm kind of done, but it stays in the 80s. I'll be picking up more just because I like to buy it. The Altria BP, there's something to be said for buying when others are running. But check it out, some other lessons on the screen. So as I mentioned, I think it's a great business with a temporary issue. And now this is something to be contrarian against what I just said with BP. I like buying great businesses with temporary issues. I do. I think that's what we totally what we saw with Starbucks. Altria, it's kind of a great business that always has a temporary issue, as I already talked about. BP, is it a great business with a temporary issue, or is it an okay business with a long-term issue? Okay businesses with long-term issues, you don't really want them. And so the reason I look at these different stocks that aren't really related is to help myself think through things. Now, I will never sell a stock, buy and hold forever. I own 46, I own BP. I'm not going to sell it, but I have to think more deeply. Is it a great business with a temporary issue? I think it is if they really go all out on green energy. I think it is if they go all out on transforming the company, and quite frankly, that oil price goes back up and we get out of this pandemic. But if pandemic lingers, if there's agendas against it that linger, if things change in society, they don't execute, it very well could end up in the bucket of okay business with long-term issues. And if that's the case, hey, it ain't going to do well. It's going to be stuck at 17. And so Starbucks, I always knew, great business, temporary issue, and that's why I was so comfortable buying it. Almost on a daily basis, I was buying stocks back in March because I found great businesses with temporary issues, went all in. And this is a fundamental lesson I want to share with the community, just that is worked so well for me. So moving on, dividend wasn't cut. I just gotta. People were coming to me, Ian, why are you buying Starbucks? They're gonna cut the dividend. I'm just saying, after doing this for 20 plus years, you build an intuition, and my intuition told me, no way they would cut this thing. This thing is going to weather the storm. And so history has now played out, and not only did they not cut it, they raised it. So I just wanted to share that. This is important. Take yourself out of the equation. I'm saying this to remind myself because I got my own biases. I love Starbucks. I love Altria because I view it as my way of rebelling a bit against some of these ridiculous kind of political stuff out there. I like BP, quite frankly, for the same reason, because so many people hate on oil. I love oil. Smart man, Nelly, was saying, you can find me in St. Louis rolling on dubs. And so for me, I identify with that. I love sports cars. I love cars, but you ain't going to find me driving a electric car. I'm always going to be buying gasoline-powered cars because I love it. Love how the engine works. I love the noise that it makes. I like the experience of it. No hate meant for anyone who loves electric cars, but it ain't for me. And so, look, my bias gets into all of this. But I see biases in the community that align with mine, but I also see them that go against mine. Because so many people say, Ian, no one's going to buy Starbucks for $6 a cup anymore when the economy gets bad. And I think they say that because they're not going to do it. So many of you out there, I know you make your coffee at home. I was hating on Folgers one time, JM Smucker company. Shout out if you own it. I don't, but I was hating on it because I ain't drinking that junk. No, I'm not. Sorry. I'm drinking my Starbucks or something a little more premium. But hey, that's my bias. But I know there's people who save money by going frugal on coffee. And hey, good on you because you save money to buy more stocks. But I think at the same time, because people do that, then they think no one's going to buy Starbucks. But I want to share a trend with you. This gets into the next thing. Past experience doesn't predict the future. Everyone thought General Mills was going under. It didn't. It's doing great. It's random a bit out there. It's crazy. You have to buy all the different sectors to hedge, if you will. It goes back to my point earlier in the video. Altria is a great hedge against things going bad, because things go bad, people are stocking up on that stuff and going to town. And so all I'm saying is back in the Great Recession, Starbucks did bad. Why did Starbucks do bad? Because people at that time didn't go to Starbucks because they didn't have the money to go to Starbucks. But think about it. The people that had all the money back in the day in the Great Recession to drink coffee were not the same people that are consuming it today. Who's consuming it today? Younger generations. What's one of the examples of the younger generation? These Visco girls. I heard about this at one of my PPCE and meetups back in the day when we did these before the pandemic, and someone was sharing with me there's these Visco girls. It's these girls, younger people, they have to have all the brands like Starbucks, and they wear like an oversized hoodie and like these puka shell necklaces, this and that. A lot of these trends from the 90s coming back. But also what's important to these people is they like these brands, and they don't really care if they're like different than their friend. They kind of want to be similar to their friend. They all want to wear the Lululemon. They want to have it all the same. And I don't know much about them, but all I got to do is shout out to them because they love Starbucks just like I do. And what I'm trying to say is, you tell a Visco girl now, right now in the pandemic, not to pay $6 for coffee, and she's going to tell you, get out of here. And so what I'm trying to say, though, that didn't exist in the Great Recession. Back in the Great Recession, it was different people, different demographic, people that might find Folgers acceptable. You go to a Visco girl, is she going to find Folgers acceptable to drink that? Heck no. No way. And so what I'm trying to say is the trends are changing. You have to keep that in mind as an investor. And this is hard actually for a long-term investor like me because I buy and hold forever. And as a buy and hold forever investor, I need companies that can weather all the different trends, because one day those Visco girls won't have any influence or power anymore, and it'll be the next generations, and these companies will have to find out how to work with those generations and kind of make that all work. So that's a whole nother thing of it all. But I'm saying right now, 2020, I'm just trying to say, just because you're saving money on coffee, and more power to you if you are, most people aren't. I'm just flat out going to tell you, this is common sense to me. Maybe I'm biased from where I live in California, but ain't no one care about saving money. If it's their last dollar, they're going to go buy $6 Starbucks, and they'll keep doing it. And I love Starbucks for that. And I think it's a great investment. So, That's probably the extent of what I want to share today. I know I'm kind of preaching today, going through a lot of different stuff. Hopefully I didn't offend anyone out there. If I did, much love to you. Wish everyone in the community all the best, but I'm just telling it how it is. I'm kind of going out there today with what I think right now, because it's late at night, everyone, and I had my coffee. I'm wired. I don't know what time I'm going to bed, because I'm going to edit this thing and hopefully get it live tonight. I love you all. In terms of a full disclosure, I own the stocks today. I am long Altria, ticker symbol MO, Philip Morris, ticker symbol PM, General Mills, ticker symbol GIS, BP, ticker symbol BP, and StarBucks, ticker symbol SBUX. I own all of those stocks in my personal dividend stock portfolio. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for fun and entertainment. Just sharing my personal journey here for fun and entertainment on YouTube. If you're going to go out and make any investments in the stock market or anywhere else, please consult your licensed financial advisor first. I love you all. I'm so happy to be here. Please subscribe, comment, like. Best way you can support me. If you want to see more videos, please support it. Love you all. I'll see you all in the next video.